So good afternoon. It's Monday market analysis time again, and there's plenty of blood in the streets to take a look at, because yeah, I think everyone's seen it. It's making the big headlines, and the funny part is that Bitcoin lost value is the big headline, but it's actually that Netflix also dropped, like, what was it, 25% in a day or something. It seems to be less important. So just quickly scanning, and it's like I said before in the article, CNBC says the same. Just the institutional investors are closing all risk investments, and they are waiting to see what the Fed will do next. And quickly switching to the agenda, Wednesday evening is the big meeting. It's the interest rate decision. It's expected to stay flat, but you never know with those guys. And we have the press conference when they probably announce how fast they will start tapering and starting to clear out their asset sheets. So that's interesting to see what's coming. So far, Europe market is pretty deep in the red. It's all just completely 2-3% is red. So US pre-market, it's also in the red. So I don't think we are out of the blues yet for that account. So obviously there's a lot of speculation going around with the rate hikes and stuff like that. So yeah, it's not a pretty sight. We knew it was coming one day, but yeah, you never know when it happens, when the fear is enough to get people to exit all those markets. Before we switch to the charts, just quickly the calendar. The really big thing is Wednesday evening, obviously. And then Thursday, we have some GDP growth rates and stuff like that, durable goods. And I think that's much more interesting than the personal income ones. So if the forecast is that the GDP will grow quite a bit better, but somehow I do have some doubts about that forecast. It wouldn't surprise me at all if it's much less than expected, and that could just be a bit of fuel on the fire that the Fed might spark. So be careful out there. So switching to the charts, and all we really have to look at is Bitcoin, because there's nothing else really matters. Alts are getting destroyed, obviously, and that's why it's so important to not be full into alts if you are in this for a longer term. So daily we are pretty much floating up and down a bit. And why is this chart so weird? That's better. We were missing the last day. So we're floating around that 33, 34K-ish, 33, 36K-ish. And on this chart, you see we broke the CTO band, and since then it just went downhill quite fast. Interestingly enough, we are not yet in oversold territories like we were here. So like you see these stars, they're the same indicator as the heartbeat here in the indicator below. You see the peaks were exactly marked by the stars, and this bottom was also pretty accurately marked. as the middle of the downward move, and we haven't got there yet, but we are finally getting close to that. There is some delay in this indicator, so probably if we stay around this level or above 30K, I think we will get that oversold marking in the next 2 days. Logarithmic regression, we entered the green zone, the buying zone pretty much. As you can see, we rarely go below that. We did in the March COVID dump, obviously we went below that, but bounced up pretty far up. You see 2019 bottom pretty much stayed inside the green band. Also the whole period from August 15 to March 17, that whole bear market, we managed to stay in that green buying band. And the only exception so far in history was the COVID flash crash in March 20, when we dropped below it. So the bad news is we are pretty low. The good news is the bottom of this indicator is around 27, 28K. So yeah, that's still quite a bit down to go, but it's not that crazy. It would still mean about maximum pain, according to this, is 24% down, so from where we are now, but it's close to 28K. That's pretty much the worst case. You could wick probably below, but this indicator has been very good in marking those market bottoms. Interesting though is still we have not been in the overbought territory. So definitely this cycle is different than all the others before. But yeah, then again, the whole macroeconomics are completely different. Looking at the Fibonacci playground I've been using. And currently we are at the projected Fibonacci golden pocket level, that is about 34K-ish. So it will be interesting to see how we end up. Historically, price has stayed in that orange bar zone. So there is a bit of space to the downside there, but not that much. But we have never been in these macroeconomical situations before. So let's just hope the story goes. And the other long-term charts I had, this was the projection. We did scoop a bit more down than the previous bottom, but it still looks pretty similar in behavior. We are trying to get back in there. We're not oversold on these two yet either. But the bottom one is pretty much never oversold really. So yeah, all these cycle analysis indicators say there is a bit of space to the downside, but nothing points to 20K or something. They all pretty much go to 28 to 30K as the bottom. So maybe that gives a bit of a hope. Switching to the other charts. Dixie US dollar index. It's just entered. It was hitting that resistance zone pretty hard for a couple of days. It now broke into it, but it's not really spiking as much as you would expect in when there's fear in the market, like in March 20. I don't know if I can quickly scroll to there. Like in March 20, when the COVID crash hit, you saw the initial drop, and then you saw a big bounce in the US dollar. And that's pretty much the V-shaped recovery after an initial drop. Then you see the reaction of the investors is to run to the US dollar. We did see it a bit here, but not as violent as in March, obviously. My guess is it might test the top of this box before continuing down in a couple of weeks. And just from a TA standpoint, just see how it hit that harmonic level 2 days in a row, confirming it, and then you had a very nice reaction there. So also the DXY and harmonics seem to be quite friendly to each other. And what is interesting, if we would make a fourth lower high, then things would really become really nasty for the US dollar. And you might have something like, you see also here, these tops are usually one higher and a couple of lower ones before a really big leg down on the higher time frames. And that seems to be in development here too. I've got too much stuff on my screen at the moment. So no good news for the US dollar really, until it breaks above the 97, and I really don't see that happening anytime soon. Stock markets, this was Friday, where we hit like multi-month low. And how far have we dropped on the SP 500? 8.8% from the last top. I think that's the Dow Jones also. 7.8%. Nasdaq on the last top two here. Ooh, even 13%. And obviously we have Bitcoin also correlating to these weekend close. That's also been quite a nasty drop. So for the stock markets, I don't see, maybe a small sideways, small relief rally until Wednesday. That's probably when the direction will become clear. Obviously, you have this zone here. That's a very critical level. If SP 500 drops below 42K, 4.2K, then it's really in for a lot of hurt. So stock markets are also at like critical levels with a bit more downside potential before very strong support. Let's see how they open in, I think in 10 minutes or something. Gold is slowly crawling up, but there's no big influx yet. This on the daily chart, but it does look good long term. If we switch to the weekly, you have that huge cup and handle pattern that started almost 11 years, like 10 years ago, decade old structure. So if around the summer period we're hitting that 2K mark, then it could be a very interesting level to enter this market. I'm definitely watching that. Yeah, Ethereum, for this, the Bitcoin chart, it completely, that pattern completely failed. You did have the bounce, but it just followed the macro and went out of the window. BTC dominance is moving up, obviously, because the alts are losing much more further ground than Bitcoin. We don't, Ethereum to Bitcoin chart does seem like a very nice place for a bit of a reversal. if it somehow manages to go back to that 0.068 range, then this pattern is still pretty much valid. But Finex positions, longs pretty much floating sideways. And interesting, there's not a really big buildup in shorts. So that's the good news. It seems the whales do not expect it to go much lower than the approximate current levels. So that's at least the good news. If we had a big spike in shorts like we had before, then it would be really bad news. So the total chart, total market cap we've been looking at, you see that this head and shoulder that we've been drawing for a couple of weeks now, like when I said, when we break the 2 trillion, we are in for quite a bit of pain. We had that fake out, came back, and then it pretty much back tested the bottom of the head and shoulder neckline, and then it went down further. And on this time frame, if it really goes bad in the macro and we don't get a V-shaped recovery in the coming week or something, then sadly the target will be probably $1 trillion. So that would mean another 30% loss in crypto value. We are at a pretty strong support, and the Fibonacci, several Fibonacci's aligning though. So we could maintain this current level and never get to the potential harmonic, because a harmonic is nothing until it reaches its target. But if we look at Bitcoin, it's pretty much that 33K, or we're going straight down to 30K if we don't hold it on there. Same if you look at the Fibonacci and gun lines. We broke this box that comes all the way from July last year. We broke it, we went back to backtest it, and we now have some more downside potential. And you see that the 30K zone is a really strong support with 31.5-ish as first again support. So this is definitely, I think, the potential bottom. Aligns with the other charts that also say we are low, but there is still a bit more downside potential, and that could be around 12-13% on these charts, obviously with potentially a wick bit down. If I just haven't touched these boxes for a long time, sometimes they just, TradingView just not let you redraw them if you don't touch them long enough. Just do it the dirty way. So this is my 30K is, in my opinion, pretty much the potential bottom if 33K doesn't hold on that. And keep in mind, the total drop you saw is also all the altcoins that have been bleeding out, and if Bitcoin goes down to 30, that might be enough to come close to these 1 trillion levels in total market cap. Not a pretty picture, but it's all macro, really. At least we know now if all the institutional speculators have been exiting the market pretty much. So what the bottom is pretty much the core value of Bitcoin, of the long-term investors. So that's one way to look at it, at the positive side of things. quickly looking at some divergences and harmonics. 1 hour, a bit of divergence and bullish harmonic. The 4 hour, we do have an harmonic entry at the moment, but not any divergences supporting it. The 8 hour, also a bit fuzzy, but we still have a pivot to do. And the 12 hour, we had an entry and we seem to have a confirmation low. So there is not much different than the other charts. We just look only 1 hour. We had our low. We might have a bit of a spring low here. We are oversold here. Trend momentum is moving up. We are forming a nice anchor wave there. Money flow is recovering only 1 hour. We also exited oversold here. We are at an harmonic entry. So the 1 hour looks in the green. 4 hour trend momentum is also about to cross the zero line after being oversold here. It's also at a harmonic entry. We're still oversold on the relative strength delta here on the RSI. So pretty much until 8 hour, until all the shorter time frames, until like 4 hours are looking a bit bullish at the moment, but the higher time frames are not really into recovery yet. Like here, we are not forming a trigger wave yet. Trend momentum is flat. True money flow is still in the flat on the 8. Same story on the 12. And on the daily, it's still in dropping mode. So yeah, what can I say? It's dangerous too short here and it's dangerous too long here. I think best is just sit on hands and wait for the market to make its decision on that. I'm still 50% in USDT. I did buy some Bitcoin back around the 3,200 level. Sorry, 3,300 level, pretty much on somewhere around here. Somewhere here yesterday. So slowly scaling in if we drop any further. And the same if we go higher, also looking to scale in, but it's hard to predict because everything falls and stands with this stock market sell-off, and it all depends on what the Fed comes up with on Wednesday. So not much brightness. Good thing is we know that once the market recovers, Bitcoin recovers much faster than the stock market. So hopefully it gives us a nice buying opportunity for the rest of the year. Just quickly switching to the daily chart. Just going to remove the drawings and the indicators quickly. A bit of a clean view. Currently at You have this accumulation range from last summer, where we're pretty much floating around the middle at the moment, and the bottom is aligning with this button here. So that's the 29K, and it were all wicks. The last lowest daily close here was at that pretty much at 30K. So from here, and I really think hitting 30K is quite likely in the coming days. It's the most likely scenario. And after hitting that, we could see pretty steep recovery, but it all depends on the Fed. I wish I had more bullish news to pick from the charts, but there's not much I can change about that. We just have to wait for Wednesday evening, EU evening, obviously, and see what the market brings us. So yeah, I suggest we all take a break. Hopefully nobody got hurt too bad by these drops. And most likely scenario is hitting the 30, breaking 30. That would really, really surprise me, like properly breaking it. Then there's something going on really wrong in the world. And I think we all are pretty much screwed then. So no doom and gloom thinking, but that 30K is one of the biggest support levels in probably the history of Bitcoin. There's just so much coming together there, and then really don't. If we take the bear market low to the high, you also see that, and that's the COVID crash, so that's not really the best anchoring point, but you do see that these wicks, you might get a wick to 28.5, 29-ish, hitting that golden pocket of the whole move. But realistically, I usually draw my fibs from the start of the move. This was sideways, fake out sideways. So my normal anchor point would be here, not taking the absolute low, but the start of the move up. And then you see exactly that 30K, low 30K zone aligns with the bottom of this structure with that, and it is the most likely target to hit. Very solid support. So maybe a bit of a wickiness down. Last thing I want to check is the CME gaps. Regular. We got a line. Yep. Let's hide the drawings, see if we can. Not really easy to see sometimes on the line chart, candles. Let's hide this one. So here we have that infamous CME gap, and I think we exactly hit it. Horizontal line. Yeah, we hit it perfectly. So in my opinion, we filled this gap, and I really don't want to start about the other gaps. They are so long ago that this one is filled. It's already crazy. So anyway, guys, that's it for today. I'll drop the recording as soon as I got it downloaded. Stay safe out there. Don't spend all day watching the charts. You might be putting some cheeky buy orders at 30K. At least I will definitely scale in more from USDT back to Bitcoin once we hit that 30K level. All right, guys, take care and speak to you later.